Hello everyone, this is Fixed Income Outlook for the month of August 2025. In its latest policy review, RBI has held repo rate steady at 5.5% with a neutral stance, just as expected by the markets. The decision was unanimous. The committee members signaled a pause to let the last 100 basis point cuts to fully work through the system. Despite global uncertainties, the RBI remains bullish on India's growth, keeping the FY26 GDP target still at 6.5%. The focus now shifts to transmission of previous cuts and inflation trends in the coming months. The central bank now projects FY26 CPI inflation at 3.1%, down from 3.7% earlier. This is a significant downward revision. This is driven by the sharp correction in food prices and a favorable monsoon. But the catch is that the RBI has cautioned that this disinflationary trend may be temporary. As the base effects fade and food prices normalize, inflation is expected to rise again, with Q1 FY27 is projected now at 4.9%. Meanwhile, the core inflation remains sticky above 4%, pushed up by elevated gold prices and services cost, limiting the central banks. The markets may have hoped for a dovish pivot. RBI made it clear that the bar for future rate cut is high. Instead of rate action, RBI is now expected to lean on liquidity management as its primary tool. With surplus liquidity now averaging at around 3 lakh crores daily, the Reserve Bank's aim is to keep credit conditions supportive, but without triggering any new inflationary pressures. It looks now that even if the US Federal Reserve start easing now post very weak non-farm payroll data and its revision, the RBI may have to stay cautious for some time, just like Fed has been cautious for some time just now. This is because uncertainty around tariff and volatile capital flows that could destabilize INR. To safeguard external stability, the RBI will need to maintain a healthy interest rate differential from US Fed funds rate. Additionally, it must keep some policy space reserved to counter any potential drag on growth which may arise from tariff-related disruptions. That said, there is narrow window for a rate cut in October policy, but only if tariff issues are resolved and the Fed is near to begin easing again. Until then, we can expect RBI to treat carefully. Thank you.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.